world of digital currencies is going through a free fall. Two major Bitcoin exchanges were hit by cyber attacks in June, and hackers around the world are asking for ransoms to be paid in Bitcoins. It's all dealt a blow to Bitcoin's value. It's dropped by 20% from its long-standing market price of $3,000 per coin. Smaller and lesser-known digital currencies have been hit even harder. The total market value of the digital currency sector slipped to $80 billion this month. Just 2 weeks ago, it had been worth $115 billion. Many analysts believe the turbulence is far from over.
When we look for signs of excess in the market, I look at Bitcoin, and to me, that looks pretty scary.
Not only do digital currencies have the notoriety of being the chosen form of payment for hackers and digital criminals, but Bitcoin enthusiasts are also fighting over adopting two competing Bitcoin operating platforms by the end of July. It's raised the possibility that Bitcoin will be split into two different forms. If that happens, it could further damage investor confidence. Sourav Roy, TRT World.
So let's try to decipher this issue now with Erik Voorhees. He's the founder and CEO of ShapeShift, an online platform for trading virtual currencies like Bitcoin. He's in Denver, Colorado, in the US, and joins us now. Erik, great to have you with us on Money Talks. Let's start now with the issue of these virtual currencies that have been fluctuating in value so much. Can they really be considered the money of the future if they are so volatile?
Yeah, you should expect anything that is fairly new to be volatile. Any new market is going to have volatility. I think what your intro missed, even though the crypto market has fallen to $80 billion in market cap from 100, is that 6 months ago it was about $30 billion. So on any real timeline, crypto has had the best year in a long time and has gained tens of billions of dollars worth of value over the last few months.
Right, but as a reliable store of wealth, which is one of the factors, one of the definitions, if you like, of a money, of a currency, it doesn't really fit that definition, does it? I mean, if one day the value of your currency is X and the next day it's X minus 50, it's not a reliable store of wealth.
Yeah, I mean, first of all, people should not be holding cryptocurrencies as a stable form of value. They are not that yet. They will become that in time. But what they do offer is a way to move value across the world instantly at near zero costs. And what they also allow is to hold an asset that cannot be created out of thin air, such as dollars or euros, which are continually debased and lose value every single year.
You say they can't be created out of thin air, but you can actually become a Bitcoin miner fairly, well, I wouldn't say easily, probably not for the likes of me, but for someone with as much technical expertise as yourself, you can actually mine Bitcoins, can't you?
Yeah, except that there are only 21 million Bitcoins that will ever exist. So it does not matter how many people mine them. They are released on a set schedule that everyone in the network knows. And the new coins that are created go to the people who are mining, but there are never more than 21 million. So you compare that to something like the US dollar, which is created by the central bank to the tune of many billions of dollars per year and is debased constantly. Right. Okay. And you can understand why a lot of people prefer the alternative. I
do understand. And very quickly, in 10 years' time, which cryptocurrency do you see surviving?
I think 99% of them will collapse, just like 99% of new businesses fall apart. But Bitcoin and Ethereum are probably the two best bets right now in terms of durability.
Great. Erik Voorhees in Denver, Colorado, thank you ever so much for your time.